Good afternoon. Welcome to Options Tender. It is Monday, September 9th, 2024. Welcome, traders. We are here today. Nothing really changed from the weekend video, but on the micro term, I think we're at a pivotal point. So I want to make sure we do this video right now, even though I usually do these videos anyway intraday at around noon or 1 o'clock. If you want to receive these videos intraday, to consider becoming a supporter. And that does involve getting trade alerts as well. So quite a value at this point. And just testing out the YouTube membership and things like that. And those prices probably won't last forever, but we'll see. So if you're new here, go down to that bottom right-hand corner, hit that Options Center logo and subscribe. Thank you for all the likes, you guys, and all the support. We're growing this channel. We're looking at SPY on multiple time frames, and then we'll go around the horn on the 65. Yes, I did forget to do IWM on a couple videos ago. I tend to get to about the 20-minute mark, and I kind of rush to get out. So, yeah, hold on tight. Let's jump into it. We have SPY on the monthly time frame. If you're new here, 2,000 top, 21 top, 24 forming a top. And in the intraday is where we're really trying to figure out whether we're making a new high or not. We know that in the long term, the risk reward is to the downside, period. Okay. Now, can we make it up to 6,000? Sure, that's possible. I think it's not very likely, but this hangman here is a possible reversal along with a tweezer top formation to continue lower from here. Nothing says that we have to make a new high at all. It could be a double top and then we continue lower. But we are kind of keeping an eye on, I know that we talk about 2007. We have a gentleman on here that continues to talk about 2007. I agree. It doesn't really look the same because it goes straight up after a dip. But I like the 2021, which in a sense, to me, is very similar. Okay, so it took about 3 months for this price action to happen, and then still consolidated for that wave 2, or however you want to count it, and had a consolidation area for practically 3 more months before continuing lower. Things can take time. That's the gist of this conversation. All right, so far, inside candle. Divergences has not played out in the monthly time frame. I think that's the recession that's going to play out. We'll take a look at those. We're eventually going to see this thing cross over. Histogram is going to a darker green here, lower. And we should see RSI correct. Get to, oversold prices. Slow still go all the way down. This is the monthly time frame. This could take a couple years. Typical recession is about 18 months. So we'll see how that plays out. Some people are even talking about the recession being a sideways move. If we go to, let's see here, SPX, let's go on the monthly. Has more information. So some people talk about the 29 crash, that this is the market structure that's going to form here to the 2029 market crash. Okay, this was very sharp. I think this is more of a flat pattern. It could be a zigzag, but so the alternation could be some sort of triangle or some large flat, very similar to 2000 and then 2008. But nevertheless, it could be a sideways large move, but sideways, and perhaps all the way to test years and years. I've heard some people say 10 years out to test this trend line to the downside. I don't know that. We'll look for the entire first move first, and then look for retracement, and that will start to give us clues. It's going to take a long time for us to figure things out and make that compatible with our oscillators long term and such. So let's go ahead and jump to the weekly. And I do apologize about I looked at the YouTube videos that have been being produced. When I play back my videos, they are crystal clear. When I go to YouTube and play them, they are very fuzzy. I'm working on that right now today is the test. I changed my settings in OBS, and we'll see how that goes. Okay, so sorry about the quality of the videos. We'll work on it. We have the weekly time frame. Looking at it, possible channel. I want to see if we can test the bottom of this channel, see what happens there. I do think that's going to happen. But the question is how's this range going to form? Okay, we could have a low here. We tested that 20-week moving average so far. I think there's a possibility of just eking out a possible doji candle a little bit lower. Okay, I'm already positioned to the upside, but I still have some puts that still could play out just a little bit more. Maybe not extreme, but a little bit more. We don't have any real catalysts until Wednesday, so we'll see if this inside week plays out a little bit to the downside, gets a wick, and then starts heading to the upside. What's been giving us trouble for quite some time is the 162 retracement. Where does that come from? From the 2021 correction. Okay, you had your retracements. We played against it and then got above those retracements. Then we got above the high, tested back, and continued to the you could say extensions, but I'm using a retracement tool. So this is a 127%. That was the first hurdle to get over. Got back, tested, sharp move down there. Didn't expect that to be so sharp, and then V-shape recovery up to that 162 again. This seems to be the ceiling for now. If price action does get above it, I don't think it will reach very far. Okay, we do have a time relationship around the middle of September. So 10-10, we'll be looking out where price is at that point. So do we continue lower and just get some sort of retracement and head lower? That's possible as well. It could be a complex correction. I'm not sure that that's the case. I think we're looking to hold to the upside now with these moving averages and such. We're having a little bit of trouble at the 8 EMA. So that could be a good sign that maybe we reject just a little bit going into tomorrow, possible turnaround Tuesday, have some sort of little V going into there to head to the upside. Going to the daily. On the daily time frame, we saw this wedge, this bearish rising wedge, fill out, overthrow, come into confluence, reject off of it after breaking down, rejection, couldn't hold above, and a sharp move lower. That's a fake break. That's how moves happen after the break like that. I didn't think it would come down that far, that fast, but it sure did. So after this move back up, we have a potential trend line. Not a great one. The one on Qs is a little bit better, but we have two touches here and a gap above it, and price consolidated for 2 weeks and then broke down. Couldn't get back above that 8 EMA, so technically we're in a bearish position. Are we reversing here? We have a possible inside day. I'm not sure that that's done yet. I'm looking more towards this 100 moving average, which is around 537, which is still above our target range here. It still possibly could make it there, but I don't know if it'll actually hit that box at this point. So we'll keep an eye on that. So today could be just a dead cat bounce. Now, what we're looking at on this page here, sorry, I was thinking for a second. Okay, we have our potential 1 here. We did not get a new high. A sharp move for a 2. This is a possible zigzag with the end here. If this is an ending diagonal, I think this wave, you'll be able to see it on the 65. It possibly crosses over this first initial wave and then has another move down, which the 537 would be that 50% retracement, which coincides with the 100 simple moving average. So that looks like a good spot there going into 9/11. So again, that's Wednesday, that's CPI, that's before the market. So whatever happens Tuesday, possibly before the market happens, we could have some sort of big move reaction off of CPI in the morning there before the market opens. So I'm positioned to the upside at this point. with individual names, but I have some indice puts still out there. And most of my calls are out to the 27th, at least the 27th of September. So plenty of time if those dip and have put protection at this point. Those were swings, for the puts, but now they're playing as put protection. Where does the market go from there? This is the range up here. So 600 is a possibility, but I think this is more of a possible ending diagonal where 1 is going to be the largest, 2, wave 3, and some sort of 4 or 5 maybe plays out in here. But I think our potential target here is 127 at the 580. I think that's kind of what we're looking at to finish our move here. If price action gets over the 580 and can hold over, not a big wick from a day, from a daily candle, you get a wick under there. That's not holding above 580. So we'll be looking at 580 being the mark in the sand, and then after that, the 600, that 599 will be the next target if price wants to get up there. So we'll see how aggressive the wave 3 possibly is, if this is even a wave 3, to make a new high here. So what we'll do at that point is we'll draw a trend line down, since this is barely, and this is probably going to look like an ascending triangle, really, or maybe even a cup and handle. However you want to look at it, doesn't really matter. So time 9/11, we're looking at wherever we're at going into Wednesday will be our key point. Okay, 65-minute. On the 65, here's what this will kind of look like here. Here's the pivotal point that I was talking about in the beginning of the video. We may have crossed already here, and that would make this an ending diagonal if we went further down. Because we talked about on Friday, this is a market structure here. You see this possible 1-2. Yes, it could have finished in here. It's very, very small and tricks everybody, and that'd be the low, and we continue higher. But we really have some unfinished business here. We didn't make it down to any real fib, and it's very typical to hit Fibonacci's retracements. And so we'll look at that in the next page. Let me get rid of this time factor. So we're still in this time frame here to hit our target. Can it make it all the way down here? Yeah, this could be a 1, 2, 3, 4, and the extension could go further all the way down here. I just not sure. It doesn't have to, but we're looking at this gap area around the 537, whereas that's right where the 50% retracement is, and the gap support would be. So, just a move under here and a snapback to the upside would be more of the picture I'm looking at. But we're holding at this resistance, beautiful resistance here that had a breakout and above. And it's coinciding right with this 200 moving average on the 65-minute. So let's look at this. That low here is 547.10. And our high so far, 547.33. So we got our crossover and we're at resistance. So this could be a ending diagonal. And we're going to have to look at the Qs, and because that says a whole nother story. We're right at resistance at the Qs. So hold on tight. We have some more information. So whether we get down here or here, doesn't matter. We'll be looking for our price target up here around the 580 in this time frame. So you have the FOMC here. Wherever we are at the FOMC, if we are not to this target yet, I do think this would be a acceleration to the upside. Let's look at the other board. I still have this counted in a different way. This was our old count, but now that we got underneath this 382 retracement from this market structure low here, we can erase this because this is no longer likely a wave 4. This is now more likely to be a 1. And I think this would be the high here after a rectangle correction. 1. And I think the wave 3 will be somewhere in these price clusters here, time price clusters. This would be the wave 2 bottom. And wherever we get to, this 50% or 62% will be the wave 2. 3, get some sort of probably small 4 in here. and 5 to complete it, up in that near the end of September range. Okay, it could be out here to 924. We'll see when price plays out, but you see that 100 200 moving average holding right now, and no completion of any move to any major Fibonacci. So 50% is likely to hit, 62 possible. So let's go over to the Qs. So let me, this didn't hold. So let me adjust this. So we'll be looking for a move similar to this. Okay. QQQ. On the Qs, same thing, but I think the Qs are going to show to be just a little bit stronger. You have the support right underneath here, which is a breakout area. And that's been our target since way up here. I'm really, really surprised that this just was a tough trade, but holding on to those swings into time and price right here is, it's, you know, you don't always hit the trades dead on. But we didn't necessarily hit it yet, but if this price action hits a little bit lower, I think that's exactly where it goes. 445. That's what we're looking for. It could be done already. Like I said, this is the wave structure we're looking at. 1, 2, 3, 4, and 5. What will negate this? This is the big deal here, is what will say this is over. And we're working on that right now. So this is why it's a pivotal point. You see, we didn't quite get to the 62% retracement, but we're in the zone. So this low could be in. We have still the puts on, and we're right at this 382. So if this is the market structure we're worried about, we're putting this retracement here at this potential wave 2 top and to the bottom here. And we're right at that 382 retracement, which would be a typical wave 4 pullback. And this would not. This would be just a regular impulse wave for 1, 2, 3, 4, 5. And on SPY, it would be a ending diagonal because you're crossing over the waves, but this one's not going to cross. But if it comes above here, the 50% and this 382, and we hold above, right now it's holding still, but if we hold above, then this move is likely over. Okay, and this is the bottom. If not going into tomorrow, I think if this does reject, I think it barely ekes out the 447, tags maybe a wick in here and starts moving up. If it does get underneath the 447 and holds underneath the 447, then that ending diagonal and SPY is likely to go down to that 62% retracement, not just the 50%. Okay, so this is showing just a little bit more strength, and I think it could just eke out just eke out a new low here to tag the 62% retracement and go higher. All right, so overall this picture, this is our impulse wave that we've been counting. This is what we're basing everything off of. The tail that wags the dog. We're looking at wave 1 being N, and what is this correction looking like here for the Qs is the major thing that we're looking at in order to predict what the market is going to do. Okay, so if we're looking at this B wave being done, we're looking at an A B into the 62% retracement, and then a C. So this could, be a flat pattern, could be a zigzag. It doesn't really matter how you classify it. It's we'll be looking for the target to close the gap here. But at minimum, the 786, which was left unfinished. So we'll be looking for that to tag, probably close the gap, and then we'll be heading much lower, much faster. Now, while this happens, I thought this was going to go deeper. It would allow the divergence between SPY and Qs to happen. But now this could be maybe a much slower move. All right. So if this is an impulse move, it could be actually an ending diagonal here, but it just needs to be a 5-wave move and get a lower high from the high here. And SPY potentially could get a new high while that happens. But if SPY does not get a new high and we still go to tag these, then so be it. We'll count it a different way, and the double top was in. I'm looking at the Q's much more important Q to see whether we go lower at that point. Okay, so important level we're at right now today. And let's take a look at IWM. IWM is holding its point here. I think this is a possible ending diagonal. Once again, I know we keep talking about these ending diagonals, and then potentially this could go up to hit this AB. If you're new here, let me just show you the bigger picture. I think the top was in here. We had a very large A wave and a expanding flat for B, because we had a new low here. So A, B, and then the ending diagonal where the waves cross. 1, 2, 3, crossover wave 1 into 4, and now looking for a 3-wave move. They're all built of 3 waves, okay? And now we're getting our 3-wave move up for a 5 into B, and C should be pretty dramatic, all right? And that could be just a larger, big picture correction, start of a complex correction, okay? This thing could last for a very long time, but this should be an impulse wave to the downside. Let's go to SMH. Okay, and the 65. Now we'll just be looking at SMH. I'm already long the video. We got long in here just a little bit early, but again, we're later dated. So we'll be looking for this downtrend line to break and for us to have a deep retracement here as well. Do we fill the gap? I don't know, but that's very similar to the Qs. So we're looking at this being a complex correction. Is this correction over? Again, we have this unfinished business. 786 is likely the target if we do get one more low. And then you better believe we're going to add on to our positions going into the 786. And if it wants to go even further, you have the 206 here. And the target could be the 786. That's possible. If we want to close the gap, the 88 is right above it. VIX. The VIX, so we're starting to get a pullback here to the breakout zone. So do we have one more and get a lower high? Do we have one more move? I'm not sure that's going to play out. So we had this flag break, fake break. We're coming into the 200 moving average again, and good support on this bounce for the VIX. It's possible we don't get a higher high. We actually get a lower high in the VIX, and we get a lower low in SPY. That would be a divergence, and then we look for VIX to start correcting even more, perhaps even make a new low with the SPY potentially making a new all-time high. All right, and then we'll be looking for a much bigger wedge to break out into new highs. This is not over. And I think that's it. I think that's what we got for you. Missing anything today? I did the IWM. Thanks, you guys. Thanks for joining us here at Options Center. Don't forget to like the video. We'll talk to you in the next one.